What's going on, guys? I want to talk a bit about how to be profitable trader within the next 100 days. So it's beginning of 2018. We're looking at in terms of how to be profitable. If you're not profitable in 2017, you know what? It's a really good start to start things from scratch. And the next 100 days, if you are looking to be a trader, could be extremely crucial. So I'll talk a few about a few of the stuff. So first of all, you got to sit down and figure out what is your trading style. Right now, you can read a bunch of books from Market Wizards by Jack Schwager, which has a lot of market wizards in there, which trade different type of markets, different type of trading strategies. So take a look at which one actually excites you and which one you can actually apply to your own daily life and which suits your own personalities. Because all the market wizards in the Jack Schwager books, they do have different personalities. So maybe you tends towards one personality over the other. So chances are you might like their trading style. So something that you can probably replicate. Nowadays, it's really easy to follow traders on social media like Twitter and StockTwits. There's a lot of good established traders on there who are willing to share the information. So something that you can go and find on there. And also YouTube. YouTube has been a lot of traders are actually giving up a lot of strategies on YouTube, which you can actually go and browse through it and see which one makes sense, right? Depending on your trading style, that's something you'll have to find out. Once you find out what your trading style is, then you can go and determine how you're actually going to trade. So once you determine what your trading style is, the next part we always want to look at is in terms of trading plan. What exactly is a trading plan? Is nothing but a set of guidelines that actually is going to define your trading. What a few benefits of having a trading plan is something as is going to remove the subjectivity in your trading. So what it really means is there is not going to be whether I should do this or not. It's more of if this, then this, if not, then this, right? So it's more like making things a bit more systematic, a bit more robotic. So you as a trader, your job becomes more as an auto entry and less about picking up stocks, right? So you pick the stocks initially, and then your job is really just an auto entry. And then you also want to reduce the roller coaster experiences. If you don't have a trading plan, you have no clue of what kind of trades you'll be making, what kind of trades you'll be getting in and out, so you have no clue. You also want to keep you focused on your trading goals. So if your trading goal is to make $100 a day, $50 a day, $1,000 a month, it's going to help you keep focus on it. And if you have a plan, then of course you can go and identify problems to work on. You can always reevaluate your trading plan, your trading strategies, and go back towards it and take a look at if there's any kind of changes that has to be done. Because if you don't know what you're doing, you cannot fix what is not working. Then of course it does prepare you for the worst possible scenario. So if things really were to go south, you know what kind of strategies to take. So just like if you are a pilot trying to fly a plane, there is a few steps that you have to take before you actually when you actually start the plane. You don't really go just jump in and boom, the plane starts flying, right? A couple of things you have to do, a couple of checks you have to do. So it's a checklist that you'll have to go through before you actually put in the trade. So that's what a trading plan is for us as traders. Now, in terms of how to develop a trading plan, first off, you want to start with time frame. Depending on how much time you have in terms of trading, you might want to start with, if you're looking at day trading, then you want to look at daily ones. If you're looking for a longer time frame, maybe weekly or monthly time frame, there's something you want to look at. So keep in mind, with increase in the time frames from daily, weekly to monthly, you're also increasing the amount of risk involved, because then you'll have to have a larger amount. So you'll have to trade smaller, of course, because your time frame has dramatically increased, and your stop losses will dramatically increase as well. You might possibly capture larger moves, but their losses could be larger as well. So keep your sizes small if you do go on to a larger time frame. Next, we want to take a look in terms of what kind of markets you're actually going to trade. Because there's a lot of equity markets that is tradable, where there's equities, forex, futures, and now there's Bitcoin and all these coin currencies that can be traded. So you want to take a look at which currency makes the most amount of sense for you, right? Forex, futures, and Bitcoin are traded in a 24-hour market. So depending on how much time you have, you can actually take a look at which one makes the most amount of sense for you. Once you determine what your time frame is, which markets you want to trade, then you want to take a look at is in terms of how much risk you want to take on each trade. Generally speaking, they talk about taking no more than 1% of the risk. So it means if you are wrong 100 times, that's pretty much your account is going to get blown up. right? But if you are a starting trader, I would highly recommend to have about 0.25 or maybe 0.5% risk on the table, because you are still in a learning experience. You will have to pay attention to the market. Chances of you being profitable in year 1, year 2, year 3 is pretty slim. So you want to risk as little as possible and learn as much as possible, right? Then you also want to take a look at in terms of what conditions of your trading setup. You want to take a look at whether are you a trend trader, which means you want to go in the direction of uptrend, downtrend, or you are more of a range trader, so it's more of a mean reversion, which means the stock is moving between support and resistance. So if the stock is going like this, you're more of a trend trader. If you want to go, stock goes up, you want to short it, and when the stock goes down, you want to buy it and just play the trend. That's more of a mean reversion trader, right? So it depends. So you will have to try to determine which kind of trader are you. So that comes back to in terms of what kind of trading strategies you want to implement. Then you also want to take a look at in terms of how will you enter a trade. Depending on your comfort level, you might be a pullback or you might be a breakout trader. Also, in terms of risk parameters, if you're a pullback trader, then at times you might have to sit on the trade for a bit because it is a pullback trade. Sometimes pullback trades do take a bit of time for it to work out. If you are more of a higher risk trader, then you are looking at a breakout trades. Breakout trades tend to give you a result right away. Whether you're right or wrong, chances are on the same day you will know whether your trade is going to work or not, because you're you're looking for a price to break. If the price were to break, then you'll go long or you'll go short. And if the trade goes against you, chances are on pretty much the same day, you will know whether the trade is going to work or not. So it depends on your risk parameters. You might want to see whether you are a pullback or a breakout trader. You also want to determine what your stop loss is. This is one of the key parameters in terms of trading, right? You want to know where you want to get in. You also want to know where you get out. Getting in is something you have to know. Then taking a stop loss, you also need to know when are you going to go wrong. If you're wrong, where you want to get out. As we talk about in terms of risk parameters, you want to take at least 0.5% of risk to see if you were to go wrong, you don't really go bust, right? If you don't have chips on the table, chances are you cannot go and trade again. You also want to take a look at what your profit target is. In terms of determining what your profit target is, generally we recommend about for every dollar you risk, maybe you make about $3. So in terms of if you're wrong a few times, that's still okay because you're not taking a lot of risk. But then if you were to make significant profits, you will make some decent money on there. So one of the samples of trading plan is, for example, in this one talks about in terms of what markets you'll be trading. Are you going to be trading euro dollar, Aussie dollar, or maybe if you're looking at stocks, which stocks are you looking to trade? Or if you're looking at futures, which future markets are you looking to trade? If you're trading, say you go and determine that you are going to trade some kind of market, you also want to determine what time frame you'll be looking at. Are you looking at daily time frames, 5-minute time frames, hourly time frames, different time frames you'll be looking at, right? And in terms of, you want to take a risk management in terms of how much risk you will take. Then we'll also talk about in terms of, are you going to be trending or more of a mean reversion. So this is a really good sample of a trading plan that you might want to take a look at. Now, when you go and set up a trading plan, right, making a trading plan is all good and so on, but you also want to come back exactly in terms of how you're going to, if you really want to grow, you also have to do some execution. I mean, you can go and make a plan, all the great plans in the world, but if you don't do anything about it, nothing's going to work. So when you make a plan, we generally recommend to do at least 100 trades, right? So when you put in a trade on, a couple of things that can happen. You'll either break even, right? Which means you didn't make money, didn't lose money. You might make some money, you might make a lot of money, or you might have a small loss or a big loss. Key to being a successful trader really is if you are able to negate the number 5, which is a big loss, then is when your profitability is going to start increasing, right? So it's just something we are looking at in terms of reducing. So to be a consistent trader, you will have to execute your trades, right? Have a trading plan, have a trading strategy, and write down a trading plan to take a look at what kind of trading plans you want to be in. Because if you're entering trades based on how you feel instead of following your plan, then it would be impossible to tell whether your trading strategy has an edge or not. Right, so you have a trading plan, you have to execute it as per your trading plan, and only then you would be able to figure out whether you are right or wrong. Secondly, you cannot go and change your trading plan after a few losing trades, right? So to take a measure of your trading plan, you need to have at least 100 trades, right? Which is a good sample of whether the trade is going to work or not. The reason why we look at in terms of at least 100 trades is because in the short run, your trading results are random. However, in the long run, it will be closer to the expected value. So when you make 10 trades, you might be that you're going to lose all 10 trades. But if you take 100 trades, then you have a better understanding of what the trading strategy is, whether it's going to work or not. Then once you understand in terms of trading plan, so once you create a trading plan, you execute the trades. The next part and the most important part is actually journaling the trades, right? You want to make sure that in terms of when you make the trade, you're actually journaling the trades. You are you're making an understanding of what kind of trades makes most amount of sense. Just because you're executing the trades doesn't make shit. So you have to take a look at a couple of things, something like the date when you're entering the trade, the time frame that you're entering the trade, what kind of setup it is, which markets you're trading, lot size or the share size or the future size, right? Whether you're taking long or short, tick value, price you entered, price you exit, stop loss, and so on. So a couple of things that you will have to take note of on the journaling. Now, once you journal, one of the process of journaling is also capturing the screen of your charts, right? A couple of things you can do is save the chart at the higher time frame. So if you're trading daily time frame, take a picture of the weekly time frame. So you'll understand what is a bigger picture of what you're trading, make you a better understanding. Then you can save the chart that you entered on. So let's say if you were trading on daily time frame, you take a picture of the weekly time frame, and then you take a picture of the daily time frame that you entered on. And once the trade is completed, you take the picture of that as well. So you will know what the higher time frame is, what the current time frame is, and what has actually happened. Now we're going to talk about why we're looking at a higher time frame, right? So if you're looking at a higher time frame, for example, if you're trading of the daily time frame, we'll be looking at the weekly time frame. So this chart will give you the big picture of what's exactly happening. Depending on your trading style, this chart is usually one time frame above your entry time frame. So as we talked about, if you're looking at daily charts, you are probably looking at the weekly charts and taking a look at what's the trend, the support and resistance, and the structure of the markets. Next, we look at in terms of chart of the entry time frame. This chart is a time frame that you entered on, right? So if you're trading off the daily chart, you will mark out the entry and stop loss of your trade. In this section, write down your thoughts like what setup it is, whether it's a pullback, breakout, so on, where your entry is, where your stop losses are. Next, we want to take a look at is after the trade is completed. Now, you thought that the trade is going to do XYZ, and this is how the trade has played out. So taking a picture of the chart after the trade is kind of key as well. So you can write down some of your thoughts in terms of did you follow your plan, what is your profit and loss, how did you exit your trades, and how you could have improved on the trade. Maybe you're trying to, this will help you improve your risk to reward ratio. Once you have done 100 trades, then of course you want to take a look at in terms of whether your strategy is profitable or not, right? So trading strategy, once you have put on the 100 trades, and then you can determine whether the strategy is going to be a profitable or loss. So you can go through all this, and if it's so hopefully you have a positive expectancy in your trading strategy. That's exceptionally great. But if you don't, then you always have a few things that you can go and fix your trading strategy, right? So in terms of how to fix your trading strategy, see if you're trading with a trend. That's a path of least resistance, right? If the stock is going up, then you want to trade in the direction of the upside. If the stock is going down, you want to trade in the direction on the downside, right? If the stock is going like this, you want to trade up. If the stock is going like this, you want to trade down. I mean, if you're trying to buy the dips on the stock moving down, chances are you'll get burned a lot because you're trading against the resistance. Then you also want to take a look at in terms of stop loss. Are you putting the right stop loss? Maybe you're trading on a daily time frame, but your stop losses are too tight. That's something that you might want to avoid, right? So if you're trading on daily time frame, your time frame has to be a bit wider. If you're trading on weekly, then it's wider and so on. And last but not the least, you want to remove the large losses, right? We talked about in terms of a couple of things that's key as well. If you can remove the larger losses from your trading, then chances of you becoming a successful trader is going to exceed extremely high. So this was a presentation about how to be a profitable trader within the next 100 days. Hopefully you like it. Please like and subscribe, and I'll put on more videos for you guys to live and learn.